Hi, everyone. Welcome to the Airbnb video conference. Airbnb is finally launching its IPO, and it's allowing hosts to participate in the IPO. So should you invest in it? Well, let's dive into that in just a moment. I'll see you in just a few. So hi, thanks again. And again, this is December the 8th, it's 2020. And tomorrow, the Airbnb IPO will be dropping for their direct share purchase program for the hosts. It'll price at 6 p.m. Eastern, and then you have to decide whether or not you want to buy by midnight. So this is a pretty important decision to make. And of course, how much you want to purchase and how much you're allowed to purchase. Should be based on real solid facts of whether or not this is a good investment at this time. I think the trend is undeniable. You would have thought it was a crazy idea that people would stay in strangers' homes or even sleep on their couch, but hotel costs just got too expensive and millennials want to travel. So they've made the sharing economy a real thing. This is a real trend, and Airbnb is doing much better than Hilton or Marriott or some of the hotels. So we'll look into all of that. But the fact that Airbnb is doing much better doesn't necessarily mean it's a good idea to invest in hospitality in the middle of a pandemic. So let's look at the numbers and then you can decide. I'm going to share the screen with you and show you a few things and talk you through it as we do it. So the first thing is you can actually look at my blog. Simply go to nataliepace.com/blog, and it's the second blog listed. Or if you Google Natalie Pace/blog Airbnb, then you should hit it as the first one. So there's all of the information that we're going to discuss is in this blog. So first off, definitely Airbnb is doing better than the hotels. And you can see that, and I did put this in the blog as well. You can see that in the stock report card. So hotels, their sales growth year over year is dismal. Look at Las Vegas Sands is down 82%. Wynn, 78%, Hyatt, Hilton, all of these are off by more than half, whereas Airbnb's sales growth is down 18%. Now, admittedly, they're telling you already in the S1 filing that the fourth quarter is going to be bad, and the amount of money that they're going to have to spend is going to be pretty bad too. So they should be able to raise about $3 billion in this IPO. They already have $2 billion, so they can get through it. It's not like they're going to be cash strapped, but it is going to be a bad quarter. So if you're doing pluses and minuses, on the plus side, it would be, okay, they're doing better than the hotels. On the minus side, it would be, we're in a pandemic, they're still not doing great. On the plus side, it would be the market could be $1 trillion marketplace, and the trend is definitely moving towards house share. But on the other side, those numbers were what was predicted before the pandemic. How much are people going to travel once we get a vaccine? And how long will it take before people feel comfortable, again, traveling and staying in other people's houses? Also, how much pushback are some of these cities going to give? In Santa Monica, California, they've outlawed short-term rentals, and they just outlawed midterm rentals. So you have to actually, Airbnb really can't operate in Santa Monica. It can't operate in Manhattan. I think they just made a deal that they could operate in certain Hawaiian cities, but it's outlawed short-term rentals in Hawaii. So that's from the hotels pushing back. But people want it, so people will push back as well. Again, the real question here, in my view, isn't is Airbnb viable? It's more, is it something I want to invest in today? Or could there be short-term weakness that will allow me to buy it at a lower price later, and I'll feel better than if I buy it now and the price goes down? All right, a little more data for us to make our decisions on. So Another thing I think that people want to be aware of is that why is Airbnb launching its IPO now? They were originally scheduled to launch the IPO in March. And obviously we know what happened then, the pandemic, and then the markets tanked, and they actually had to borrow money at an $18 billion valuation. The few months prior in 2019, they were valued at 35, and then they went down to 18 in order to borrow some money. So that's another thing you should be thinking about, because if their IPO price comes in between 56 and $60 a share, then chances are their market cap is going to be $42 billion range. Whereas in April, it was 18 billion. So again, what is the right price? What is the real marketplace potential? Short-term, mid-term, long-term. Short-term, not good. Mid-term could be good if we get a vaccine and people want to travel again, because people are so heavily indebted that it's very likely that they'll want to stay, in more affordable places. There's also a big incentive for hosts to stick with it, because 50% of the hosts are using their Airbnb income to help pay their own mortgage. So they have a strong incentive to stick with Airbnb. Again, my question here is not, is Airbnb viable? I do think that Airbnb is disrupting the industry and has made it something that's de rigueur. I mean, we're willing to sleep in strangers' houses, and and we're able to even evaluate whether that's a good bet or not by looking at their profile and seeing and reading the reviews from other guests who have stayed there. So it does feel pretty safe. But is it a good buy right now? Let's look at some more pluses and minuses. All right, so in the blog, there's another thing I want you to consider. So why is it that they want to launch their IPO right now? And the reason is insiders. And I mentioned that in the beginning of the blog, is that a lot of the IPOs in what we would call the late stage of the business cycle, the companies have to do it. Because if they have been borrowing money through venture capital for a very long time, which Airbnb has been doing since 2007, then their insiders want to turn paper profits into real cash that they can buy other things with. Now, here's another problem with this IPO. Most of the time, the insiders have to wait 6 months before they can sell. In this IPO, about 15% of the stock is up for sale day one, and up to 25% could be available on day two. So this is something that could make the share price go down as well. I also believe that they're reaching out to the hosts to participate in the IPO, because hosts tend to be less sophisticated about all of this. Whereas if they were just doing it with institutional investors, that would be a non-starter. They would not be able to do no lockup. That's nobody would buy it. So I do believe that this is something that a lot of hosts are not aware of, and it is a negative. It's a huge negative, because if you're going to have, Sequoia and Andreessen Horowitz and Jeff Bezos and Ashton Kutcher and a bunch of other of the early stage investors, even some of the early employees of Airbnb are going to try to dump some, including the founders, capture profits, I should say, not dump some. All of these people are stepping in line to profit off of your investment. Then that puts a lot of sellers on the sell side. So it's possible, excuse me, I'll mute myself for a second. So again, it is possible that there can be enough buyers to offset all of the sellers that are going to be interested in selling. But it's very abnormal for there to be an IPO without a lockup. So this is a big deal, and it's a giant negative in red. Okay, let's look at a few more things. All right. So the revenue for Airbnb was 4.8 billion in 2019. So far, it's only 2.5 billion. And we have lockdown, that's in the first 9 months. We have lockdowns going on all across the US in the fourth quarter. So it's probably not going to be a beautiful quarter. So they're going to not do great compared to last year. And depending on how fast the vaccine gets distributed in the US, it's not looking that great that it will be distributed. Pfizer just announced maybe that their next round could be June or July. So it does take a while to, ramp up and get these out there and get people to take them. So it's possible that in the short term, their revenue could be impacted. And again, because markets are forward thinking, but they're also very reactive. So right now, everybody is willing to take risks. So it's very, very possible that the market will accept this Airbnb IPO. Obviously, they're able to even price their price higher than they thought they were going to. Actually, that benefits the sellers because that means that maybe up to 25% of the insiders can be selling on day two, because that was one of the conditions that the share price had to support it. So if their initial estimates were at XYZ price and this price is coming in much higher, then that may meet the qualification to allow 25% to sell by day two. So it's something to consider. All right, a little bit more data to show you. Now, I think that you should also be aware of some of the facts that are going on behind the scenes that are not reported that much. So what we have is a lot of unaffordability in real estate going on. And again, that's probably playing into why 50% of the Airbnb hosts are having to use Airbnb income to pay their own mortgage or rent even. So this is the third quarter summary from Adam Data, and they said that in about 63% of the counties in the United States, housing is unaffordable. So that's a problem. That means that, that people are not doing as great as you might think. Also, data from the Mortgage Bankers Association, you're not seeing this data very much reported on. Over 6 million renters and homeowners and 26 million student debt borrowers missed payments in September. So we have a moratorium on evictions, foreclosures, and also on student loan debt. So everybody is in forbearance, but those are expected to end at the end of this year. So again, there's a lot more peril in the economy than people are reporting. In fact, they're saying that unemployment is low, but in fact, there are 20 million people that are taking some form of unemployment today. A year ago, it was 1.5 million. So the reason the unemployment statistic looks low is that there are a lot of people, sadly, who have stopped looking for work. And when they stop looking for work, they fall off of the statistic. So they're only measuring what's the percentage of people who are actually looking for a job who can't get one. And that's a much lower statistic than the amount of people who wish they had a job. A couple more things that you need to be aware of, because this will affect travel. So debt is higher today than it's ever been, way higher than it was before the Great Recession. So here's where it was in 2008, and it's much higher today. So that affects things, right? Because when people get distressed, then they have to cut back on travel and fun and all of those sort of things. So a lot of the reason that people are using Airbnb is for travel and adventure. And also perhaps they're using it for conferences. So what do you think is going to happen going forward? Right now, all the conferences went online, right? Do you think that businesses will go back to the old model of, having big conferences in cities and filling up the hotels and Airbnb hosts? Or do you think that a lot of them will keep the online model in a post-pandemic world? It is a lot cheaper. I can tell you myself, because I host retreats. I'm able to offer a much lower price for my admission because my costs are so much lower. All right, a few more data for you to consider. Now, another thing I wanted you to look at is actually the price of stocks themselves. So if we look at data provided by Robert Shiller, who won a Nobel Prize, he's showing us that stock prices today, the only 2 times that they've been higher than they are today, is when 2000, and that's before the dot-com recession, and 1929, and that was before the Great Depression. So stocks are really high priced. It's always tempting to buy high because you think, hey, I want to join the party. But Airbnb is launching their IPO right now because they have to and because they can. They couldn't do it in March or they would have done it then. And they're sliding it into the wire, which is why they're allowing their insiders to sell on day 1 and day 2. That's something for you to consider, because it's not necessarily they're launching an IPO because they want to be kind to all their hosts and let them buy shares of the company. And stocks are pretty high. So factor in all these things, that Airbnb IPO could be a liquidity event for insiders more than a unicorn IPO opportunity for hosts. Factor in that hosts might get caught holding the bag if all the sellers sell on day 1 and day 2 and you've bought in and your price goes down. Should you be investing in hospitality in the middle of a pandemic when stock prices are higher than they were? The last 2 times they were bubblicious when they were this high. .com stocks lost up to 78% of their share price value in the .com recession. So when things get overvalued and the economy weakens, and we do have a lot more stress in the economy than showing up because of the moratoriums on evictions, foreclosures, student loan debt, and a boatload of other things. So everybody's pushed pause and they're trying to just keep prices right where they are. But things can change, and there is more peril in the economy. I just showed you a few indicators, but there's a lot more peril in the economy than a lot of people are aware of, or they would not be pushing stock prices up as high as it is. The trend is undeniable. I think Airbnb is going to be a stock that we all want to own at some point. The only question is when and at what price. I think it's a little dangerous to purchase it tomorrow at midnight when you know that when it does hit the big boards, that there can be a lot of insider selling. So I might, if I were a host, wait until it hits the big boards and see where it's at then. And if I can buy it pretty low, then I might decide to do that then. That's my 2 cents. Obviously, I'm not giving you buy or sell recommendation. I'm just trying to give you information so you can make an informed decision. Again, I'm pro Airbnb. It's the price I'm worried about. All right, I'm going to open up the phone lines. And if anybody wants to make any comments or suggestions, you disagree, you agree, you want more color on something, please let me know. Hang on 1 second. We'll open it up for our discussion. You'll have to unmute yourselves. All right, you're able to unmute yourself if you so desire. Okay, if you missed any portion of this, you can always watch it back. I'm going to be, it takes about maybe an hour to render it and to upload it, but it will be at youtube.com/Natalie Pace. So you'll be able to watch back the whole thing. I encourage you to read the blog. Again, it's at nataliepace.com/blog. If you're interested in learning how to do stock report cards and evaluate companies like I've shown you today, and obviously I've been doing this now since 1999, and I have achieved the ranking of #1 stock picker. And a lot of our stock picks that we pick at our retreats have done great. In fact, I think he was maybe 17-year-old boy picked NEO in October of 2019. NEO is China's Tesla. In October of 2019 at one of our retreats when it was trading for $2, and it's trading close to 50 now. So you can really use this information to great advantage. If you're interested in it, join me at my next retreat. Again, I'm hosting them online right now, so they're much cheaper than the in-person retreats. Let me show you how you can learn more about that. Go to nataliepace.com, and if you scroll down, you're going to see my retreat flyer. Just click on it, and you can learn more about the retreat there. It's going to be online 16th through the 18th of January. And the prices, again, are very low. And in fact, if you put together a group of 5, it's really super low. So if you have a family that you want to bring, or friends, or whatever it is that you want to do, consider doing it, because we're never able to offer anywhere close to the kind of discounts that we are able to offer online. So do check that out. We'd love to have you. Just call 310-430-2397 or email info@nataliepace.com, and we can get you registered. Also, I have a free holiday gift for you. So I would love for you to join me on that. You can just email info@nataliepace.com. I want my free holiday gift. So what is it? It's 21 days of prosperity coaching. We're in a pandemic. There's a lot of problems going on. So let us know what issues you're facing. It's completely anonymous. Perhaps we already have a blog written for you. Perhaps we can refer you to a section of the ABCs of money. Perhaps I can use it as the basis of an upcoming video conference. But the coaching that I can give to you, which is my free gift, 21 days of prosperity coaching, that's going to keep your head focused on prosperity rather than, lag down in the mud or lag down by debt. Let's face it, there's a lot of debt out there, and they may not be able to call you today, but the minute that they can, they're going to be incessant about it. And it will be very easy to be lost in debt consciousness if you do not use the tools that are provided in this prosperity coaching to focus you on prosperity consciousness and how to deal with the incessant debt collectors that could be eating you alive. Also, if you are interested in real estate, or even if you're equity rich, or if you want to buy something, or if you want to sell something, I have many blogs on that as well. So a lot of these resources are going to be at nataliepace.com. Again, if you just want to learn the ABCs of money that we all should have received in high school and learn how to really evaluate stocks, then attend the retreat. If you want to learn how to make money while you sleep and a nest egg strategy that's easy as a pie chart for your 401k or your IRA, or again, increasing your wealth, which everybody should be doing, even if you're in debt. This idea that you wait until you're out of debt to start providing for your own future is flawed thinking, because the debt collectors are not going to help your future at all. And they will take every bit of every dime that you're willing to give to them. So one of the solutions is to always be increasing your own wealth and your own prosperity in tax protected and financial predator protected accounts. So there are certain accounts that are protected from the debt collectors that you should be absolutely contributing to, even if you're in debt. I'm not saying ignore the debt. I'm just saying don't place the debt collectors in line in front of you. All right, there's a lot to learn there. And again, a lot of this is taught in my free program, the free holiday gift, 21 days of coaching. Just email info@nataliepace.com. I want my free gift. We'd love to have you. Love to have you at the retreat. I would love to have your review of the 4th edition of the ABCs of Money. And again, it's updated, just published it October. So it includes very valuable pandemic information and solutions. I strongly encourage you to get it. The ebook version is under $5. It's a great stocking stuffer as well. And I welcome your rating. Please rate it for us as well. So I guess that's about it. But you got the bottom line from me on my take on Airbnb. Love the business model, love the company. I use it as a customer. I would be very cautious because it is an insider liquidity event. It still could go up, but it is absolutely designed to let the insiders take some of their paper profits and turn it into cash. All right. I will see you. I do these at least once a month. I may try to do one on Thursday, the 15th of December. If you have a suggestion on what the topic should be, email us. We'd love to solve your problems. Again, anonymously. I know people don't like to talk about their money issues. We're here to help. That's my job, and I love my job. So your situation is going to be completely anonymous, and we might have solutions for you that are going to change the game. All right. Happy holidays. Thanks for joining me. I'll see you soon.